Hello, everybody. Welcome to the Real Estate Money School, and hello, all of you Rebel Bankers. I am your host, Chris Naugle, and I'm here with John Martinez. John is with Midwest Revenue Group and REI Sales Academy, and we're going to have something really special and very different for you on today's episode. We're going to talk about some of the things John does in his business. We're going to talk about how he helps other real estate investors with their deals, with their training and acquisitions. So what's so unique about what we're going to talk about today is you're going to get a third-party view of somebody that's seeing this from 1,000-foot view. I like to say this is your eagle eye. So I think we're going to learn a lot and get a lot out of this podcast today, but let's jump into you and your journey a little bit. So we're always talking at the Real Estate Money School about, we're talking about money. And we're always talking about how money works in real estate and the struggles with money. And our audience is all either in different stages. Some of them are just getting started. Some of them are well into their journey. And really what we want to do is we want to try to help them through that journey by understanding other investors' journeys and the struggles that they've had when it comes to money. So John, let's jump right into it. Tell everybody a little bit about who you are, what you're doing, what your businesses look like, and then let's just kind of dive right into this thing.
Yeah, cool. So pleasure to be here. Thanks for having me, first of all. So I run the REI Sales Academy. It's a sales training organization. My journey, like most sales guys, I started with all commission sales right out of high school, worked my way selling insurance, basically door-to-door in a 5-state area. Opened up my own insurance agency, built it to 50 agents. We did about $250,000 a week in business. Worked my way up from there through corporate America, companies like Cisco, a lot of tech and manufacturing type of companies. Built and ran sales teams for them. Eventually stepped out on my own into sales training because that was what I had most fun doing. And then really got deep into the real estate investment part with the sales training. So we trained acquisition agents to buy at discount 4 or 5 years ago, and that's where we've stayed since. So since then, and I think this is where we kind of meet up with your show, is we've trained 400 or 500 pretty good size investment firms in the single family real estate space. Trained their acquisitions teams, dispositions teams, and really got deep into what they do. So that's just the very short, succinct story of us.
That's awesome. And the biggest thing I'm excited about this episode, John, is the fact that everybody we have on here are the real estate investors themselves. And I want to real quick have you take a trip back in time and tell everybody about your experience with actually being a real estate investor and kind of now how you just help other real estate investors build their business, scale their business, and you focus on the acquisition side and the sales training there. So I think this is going to be really unique because you're not talking about it in a first person. We're going to talk about this from a third person view where you're literally, you can tell me like what you see with other investors and probably from a high level where I can learn. And I think our audience can learn a ton. So let's take a trip back in time a little bit. Let's talk a little bit about your beginnings and maybe some of the struggles you had. And then let's jump right into kind of what you're seeing out there with the real estate investors that you're helping with the sales training.
Yeah. So the biggest struggle I had personally in my business, it's always with growth, right? It's really easy to have a small business where you're the one person who does everything, wears all the hats. Profit margins are high. The workload's kind of high, but you can handle it. But then there's this that I saw in my business and I see with every single investor I work with. There's this spot where it's time to get serious and put systems and people in place. And that's either where businesses take off or they completely crumble. Just profit margins get slashed. Overwhelm is through the roof. The responsibility of having to employ other people, it turns into a headache. So that's the spot I think that most businesses are made or broken, is that trip from solopreneur into, a more traditional style business with employee systems and processes. So for me, it was a tough journey, and it went from, I think it goes from, you go 30, 40, 60, 70, 80 hours a week, then something breaks and you go, I got to either scale back or go all the way. And for me, it was about a year-long transition period to figure it out. It's just a bunch of testing. I joined some masterminds that helped a lot. I think I kind of skipped a lot of the hard areas because I was able to learn from others. But it was a year of transition. Now, the year of transition was super cool, though, because I went from that spot where I was at 60, 70, 80 hours a week making maybe $30,000 a month, which at the time it was amazing, right? Because working for corporate America, you make 150, 200, you're up there, you're top 1%. So from there, working my butt off, a year later, after really getting everything down, we were doing $1 million plus a year. Profit margin stayed pretty stable, and I was down to working 2 to 3 hours a week. So that year was it was crazy, but I'm so thankful I went through it. Now with the real estate investors that we work with, I see the exact same thing, right? They get to that same spot, and it's that make or break transition period, where if they do it right, work stress goes down, money goes up, and if you do it wrong, it's bad, right? Revenue doesn't increase, but you just have a lot more on your plate you're responsible for, and life gets pretty tough. So I hope that answers your question.
It does. And that's exactly what happens. I mean, many of us, when you first get into it, like you said, it's kind of the wild, wild west. Whatever you do, it's all exciting. It's fun. It's just you're doing it. But then all of a sudden you start doing that thing called scale. And as you scale, you start having to, different pain bodies bring on different challenges. And a lot of those are met with hiring people. And then all of a sudden now you got a whole new set of problems, a whole nother set of someone else's problems, if I will. And you get to see that from a unique standpoint, because a lot of us entrepreneurs and real estate investors, we're in our little vertical, if you will. It's like our little box we create, where you're on the outside looking into the box. So with some of your experience and some of the people you work with, let's talk a little bit about what that looks like from being outside the box, the eagle eye view into it from a money standpoint. Like, what are you seeing, real estate investors struggling with money, and how are they solving the money problems, and mentally, how are they dealing with that? Because this is just a common problem for every single person that's on the show, and everybody we work with our students is money. They're always concerned about money for scaling, money for cash flow, all of these. How are you seeing this being tackled?
Yeah, so that's it. That's a crazy topic, and it's crazy to me because you mentioned mindset, and that, as silly as it sounds, it took me a long time to understand this. It's like money is everywhere. Like, there's so much opportunity, so many people that just have money sitting around that they're dying to deploy somehow. Not even, sometimes it's to make, to make some points on it. Sometimes it's just to be part of something cool. Sometimes they're just bored. Like, it doesn't matter, but there's so much money out there. So I think the first hurdle is just realizing it. Because most people are like, well, there's no way I could get money. I don't know anyone with money. I don't know how to ask for money. It's like, no, it's the opposite. Money's everywhere, and people are dying to do something with it. So that's obstacle number one. And here's the silly part. So I work with, I was speaking to a young woman. Well, she's younger than I am. She's probably early 30s last week at an event I was on a panel on. And she has about a $30 million fund, and she buys a multifamily. And I started talking to a lot of people at the table, and a lot of people had between 2 million, 10 million. She was kind of high with 30 million. There's a couple with a little bit more. And the conversation turned to money, and it's how do you get it? And the funny thing was, you just got to tell people what you do, and they'll give it to you. And I think the fine line is not asking for money, but letting people know what you do for money. The most successful I hear is just, hey, I take capital, I put it here, and this is what we do with it. And then people go, well, I happen to have some laying around. Or a common way to ask is, not directly, but, hey, listen, do you happen to know anyone who wants to deploy some money in this or this type of venture? I'm looking. And most of the time the people will say, well, I don't know anyone, but I do. What about me? Why aren't you asking me? So that's the easiest way about it. And again, it sounds silly, like, okay, what's the formula? What's the secret sauce? But it's like, just let people know what you do. Now, part of that obviously is to be in the right circles, right? Like, you can't go to Walmart, stand in the parking lot, let people know what you do, and they're gonna start tossing money at you. You gotta be in the right place as well. But if you're around the right people, and you just let them know what you're looking to do or what you are doing, it happens. It's not magic.
Yeah, I think that's well said. And I say it all the time about not asking for money. Just tell people what it is you do, tell them about the opportunity you have, and then tell them how you can solve their problem or somebody else's problem, and everybody has the same darn problem. That's the universal fact, is everybody's problem is we all want to make more money. And that's so simple, because we hold the ultimate thing in real estate, solving that problem of people making more money. And I think if people just stopped asking for it and stopped worrying about asking for it, and just started going out and talking about what they do, talking about the opportunity they have, I think they'd be a lot further along. So in your sales training business, are you working with mostly wholesalers, flippers, passive income investors? Like, what would be the one category you're working in?
Yeah, you know, it's the one category is, so it's probably 50% wholesalers, and the other 50% is, or 40% we'll say, is made up of flippers, the buy and hold guys, and then you got probably 10% that are in multifamily or some other creative type of real estate. And what they all have in common, though, is that one thing, and that one thing is they've got to buy a property at a deep discount. So, you know, 50, 60, 65% ARV is where they need to be. So we solve one issue. Exit strategy is a little different, right, on the back end, but the one thing that ties them all together is, hey, if we get the property at the right price, everybody's making money. So that's what we laser focus in on, is the acquisitions piece.
So let's hone in just a little bit on the wholesalers. I mean, it's a big thing right now. There's just about everywhere you go, there's a million coaches out there trying to coach wholesaling, but it is definitely a great strategy for today's market environment. But in wholesaling, I know one thing that we hear about a lot: when people get into wholesaling, it sounds all glorious, low risk, low money in the beginning. But you know what? The one thing that a lot of people are starting to deal with is, when you get into it, one of two things: if you can't wholesale it, you either have to let it go and you're going to lose your earnest money deposit, or you have to figure a way to take the deal down and then wholesale it or wholesale it. So how are you working with your customers and your client base and helping them prepare for that piece of it? And how are they dealing with the, raising money for this part? Are they working with hard money lenders, private lenders, hedge funds? I mean, what are you seeing?
Yeah, very few hedge funds, but they're out there.
Yep.
I'm hearing more and more. I mean, we probably have 5% of our clientele that's selling to hedge funds right now, but I hear about more and more on a weekly basis, like, OfferPad, Open Door, some of those larger companies that are coming in and buying direct from wholesalers. So that's a very small part. The vast majority our wholesalers are selling to the flippers and the turnkey guys. So it's usually all private money. If they do take it down, getting a traditional loan or even hard money is becoming less and less and less apparent than it used to be. So it's usually private money. They just get $1 million or $2 million. They've got the investors who, after you build the trust, they don't even ask about the deals. The money just keeps rolling. And at a certain point, investors don't want their money back. They just say, hey, no, deploy it again. What are you doing? Go get another property. I don't want
Don't give me my money back. I don't want that back.
Exactly.
Just keep those checks coming.
So most of them, I'd say the vast majority, if I had to pick one category, it's all private money. They're all using private money. The rates are the best, the most flexibility, the least amount of paperwork and red tape. It's just the easiest to do. So I think if you're wholesaling at volume, 50 to 250 deals a year or so, private, you got to have some type of private money fund, because the wheels on everything else tend to move a little bit too slowly. Then even if you go with hard money, you got to, and you're going at scale, there's a lot of money you got to come up with to take care of the 15 or 20% that they aren't lending on a property. So that's what I see is a lot of private money.
And that's interesting too, because that's a big switch. And it's very funny, because if you look out there and you really study it and you follow social media, there's hard money lenders advertising heavily. And it's probably because what you just said, less and less people are going the hard money route, because it's just not as advantageous. There's red tape. They're not lending enough for the whole deal. So it's pretty unique that you say that, because I know a lot of the educators out there are still teaching the hard money, when really most of this business is going the private money. And that's what we show. And that's what we teach, is private money is going to be the best money. But on the second phase, so let's talk a little bit now. Let's switch gears from wholesalers, because that's kind of going to be what they're doing. Sometimes they just need short-term money to get that deal back on the market, and then they're just flipping it as a wholesale. But let's talk about the passive income investors that you've got, the flippers and the passive income guys. So more so the passive income guys, they'll use private money in a lot of cases in the acquisition, correct?
Yeah,
okay.
Absolutely.
But then they're flipping to a secondary funding source after that for the long haul, and that's the bank. How are you preparing and working with them for that transition from private to the traditional funding sources?
Yeah, so I mean, I don't get too deep into that, but what I see out there when I speak to my clients, it's pretty simple. I mean, it's just like you said, they go in with private money. They'll and usually the properties they're buying are distressed for one reason or the other, whether it's just through legal issues or through the condition of the property. No traditional type of lender is going to touch it. So they use the private money to get it to a position where traditional lending makes sense. Then they'll usually refinance, pull some of the equity out on the refi, and then go the traditional route if they need to. But even then, I'm seeing more of them start to turn from the banks to private equity funds, where there's 100 million or 50 million that just needs to get deployed, and they're going to those funds instead of the banks.
That's interesting.
Yeah, banks are tough to work with. If you're already, I mean, you know what? It's just like when I was a kid, I remember my parents saying, we grew up when money was tight. And when they were looking for money, it was always, well, banks will only loan you money when you don't need the money. And I see it now, right? It's like now that we have a couple of decent businesses, everyone in the world wants to loan you money because you're low risk. You don't need it. So what you see is you'll probably see a lot of more established investors with a couple hundred properties or some multifamilies with 2, 10, 20,000 doors that go traditional. But in that middle spot, there's still a huge play for the private money.
Yeah, no, that's well said. Well said. And that is what we're seeing as well. But I was just curious, like I said, we're doing the eagle eye, looking down at their businesses. And I have been hearing a lot of investors, like the more established investors, going more the private side for the long-term money. And what's so unique about that is I'm always talking about market patterns. And John, one of the things that I come from is a money background. And I think the thing that a lot of people don't quite understand is the patterns of the market and how predictable they really are. And you can almost see this natural progression of what's going on. It was 2008, the whole thing collapsed. Yes. That created massive opportunity for people that were experienced, that swung in, that had their banks figured out, had the money parts figured out, and they just bought pennies on the dollar. Yeah. And now you've got this market cycle climbing. We're over 10 years past the Great Recession, and now we're hitting those top peak levels of where the market is. And you're starting to kind of see it turn the corner a little, but money is flowing from Wall Street to Main Street, and you're starting to see a lot of that. And what you just said solidifies that the flight to safety has begun. And the flight to safety is no more than money coming out of Wall Street, flowing to Main Street, looking for safer places to get a return. And the cool thing that you're going to see, and I'm kind of not taking the light off you, but just kind of pointing this out. No. The cool thing you're going to see is as we do start to go down that other side, right? Which everybody's scared of, that downward side. Don't be scared of it. Just make sure you have the money piece figured out, because when that goes down, the complete opposite of what most people think is going to happen happens. Everybody thinks that when we start getting into a downward market cycle and, the markets fall and everybody's losing money in the market, they think that money dries up. No, money becomes more abundant because money has to go somewhere. And you know what? If you've got your real estate business and you've got your opportunities ready, boy, you are in a perfect position for that. So I think I didn't mean to go long on that, but that's just such an important thing. And then with your training and what you do, you teach a lot about acquisitions. I believe we spoke. Acquisitions is so important. So can we spend a couple minutes just talking about acquisitions, how you're training? Because the money part's great. And we all know money's easy. And I'm trying to, help all these stories and your journey and everybody else that's a guest on this podcast, their journey, tell the story of how money's everywhere and how to go after it and get it so that you're not worried about money to take that leap. But to get that money, this is the part that I really don't talk about much that I think we can capture right now, is in order to get that money, you got to buy right. How are you coaching and training people on the acquisition side to make sure that they're doing the right job on the most important part, which is to buy?
Yeah, it's an extension of the conversation we had earlier where you take the focus off the money. The money, in any of these situations, when you're going to buy at discount, you're adding value somewhere else, right? If you buy it retail, it means it's a direct change of value. This is the value of the money. This is the value of the property. Now, when you buy it at discount, here's what that means. It means I'm giving you this money for a property that's worth a lot more, so I have to be giving you something in addition to the money. There has to be another value block, right? You got the money, some other value for your property. So what we train on is really ferreting out what else do these people value? So is it time? Is it relief of stress? Is it, is it a current problem that they're dealing with they want off their shoulders? Is there a picture perfect situation that they're striving towards and we can help them get there through real estate as a vehicle? So it's really a conversation about forget the money. I know what Zillow says the house is worth and all that, but the conversation I want to have is where are you today? Where do you want to be? And let's see if I could put a plan together that's going to help you get there, right? So that's a conversation that the investors I work with are having with, and then this is for single family houses up to, we've got some now that are buying large scale, medium to large apartment complexes. And when you buy a discount, it's never about the money, right? There's a logical piece at the very end where you say, well, by the way, the money makes sense. But the investors that fail, their conversation is, this is what your property's worth, so I'm paying for it. Never happens. The investors that make it go, here's what I'm bringing to the table. Money's a piece of it, and that's going to be a fair part, but here's the other value I'm bringing in exchange for the property. And those are the ones that are winning, is really being creative at not just the deals they put together, but being able to uncover what the seller values and add that somehow into the deal structure. Does that make sense?
Makes perfect sense. You're basically just taking the focus off of the thing that everybody thinks is the focus, which is money, and putting it on what is your end goal and what's going to make this make sense for you. And it's not all about the money. Now, I know earlier, John, we talked about, a bunch of free trainings that you have on your website, which we're going to get to, but on those trainings, I'm sure you talk about some of the unique ways where investors are finding lucrative off-market deals. Is it too much for me to ask, but could you share with our audience just a couple golden nuggets on how or where you're seeing the most success in terms of what campaigns are working the best in today's market?
Yeah, I mean, this is really simple, and I love marketing stuff. It's the funnest piece of it. So here's what's most effective still today, and this changes. Direct mail is still probably the most effective at scale. Returns have gone in the last 5 years on direct mail from 1.5%, lead return to under 1%, but it's still very valuable. Still find plenty of deals. The investors I deal with that are in multiple cities and that type of thing, they all still use, and direct mail is the corner piece of their marketing platform. Cold calling is massive. It's getting a little bit less effective because it was so effective 2 years ago when it started that everyone jumped on the bandwagon, and so now it's a little saturated. But cold calling and with TCPA compliance and different legal compliances, it's a little tougher now, and there's some stiffer fines. But cold calling is really effective. I have a few who partner with real estate agents. There's sometimes a rub in between investors and real estate agents, but there's some that have developed some really good partnerships with the high-level real estate agents in their areas that bring them those off-market deals or deals that just don't really fit that retail box. That's effective on a small scale. PPC remains effective, but I don't think for long. PPC is got started, or pay-per-click, Google Ads, that type of stuff, got started about a year or two, or really took off a year or two in this industry before cold calling. So where pay-per-click is now is fully saturated. Leads getting more and more expensive. I just had my first investor that did an audit of his stuff last month and said, hey, I spent $180,000 on pay-per-click. I profited $180,000. So it finally came down to the point where it's at a break even. So pay-per-click remains effective in some markets, but I think will kind of become less effective. What will happen when it becomes less effective is everyone will abandon it. And guess what? The one or two people left doing it, they're going to have tremendous success with. And that's just the cycles that all marketing goes through. Once it's something saturated, people fall off. Ones will go back. It'll be effective again. It'll be cyclical. But those are the main things that we see out there that are working: direct mail, cold calling, pay-per-click, and then there's some variations of cold calling like ringless voicemails and text blasting, both of which are extremely illegal if you're doing them the wrong way. So big caveat there. Effective if you do it the right way. Huge fines and penalties if you do it the wrong way. So just be careful with anything when you're contacting people through phone or email.
That's some good stuff, because I know that there's a lot of people out there and they keep hearing the same thing. It's almost like you keep knocking, people keep getting knocked on the head about what they need to do, but everybody just wants to think that there's a magic button, that you just hit that magic button and all of a sudden that's the answer. And there's not. And there's a ton of programs out there that are trying to pitch, oh, this is the magic new thing. This is the magic new thing. But what you just said is exactly what almost every guest on this show said that they're doing. And it's kind of old fashioned. It's kind of boring sometimes, direct mail, but you know what? You're getting results from it. And that's what matters. If you're creating results, that's the only thing that matters in that. So John, I guess, what else would you think would be valuable for this audience, of investors that are either just getting started or somewhere in their journey to the real estate world? What advice would you give everybody?
Yeah, biggest piece of advice I would give. Well, I'll give two pieces of advice if that's okay.
Yeah, that's great.
For the new investors, biggest piece of advice is just take action. I'm a part of a lot of private and public elite masterminds where it's people who are doing big things. And I looked around for the last couple of years trying to figure out what the secret to success was. And the only thing that was the commonality between everyone that I deemed successful is they take action, right? They just do it. They get to a point, they make a decision and do it. So for anyone new, just do it, right? Just go for it. Do something and stick with it. For the more seasoned investors that I work with, same issue I see over and over again, and I'm gonna just piggyback on what you just said, is shiny object syndrome. The name of the game is consistency. There is no magic pill. Like there's no new magic thing. It's consistency. The investors that are killing it are consistent in their daily activities and their marketing methods and their acquisition methods and what they do, right? But then you go and you might watch a podcast or watch a video or go to a meetup of some kind, and this person is doing it this way. That's completely different, and margins are here, and people get excited and they abandon ship. And when you're constantly switching from thing to thing to thing because it's more exciting, it's the shiny object, you never get good at any of it, and you just end up just barely staying afloat. So for the more seasoned investors, I think the biggest thing they need to hear is just stay consistent and don't get distracted. Even if you got to turn some stuff off, turn it off, stay the course.
I think that's some great advice, John. That's honestly, because I've been guilty of that, and I even hate to admit it, but you know what? The truth is there came a point in time the last couple of years where just everything, we can do this. Oh, we can do this. Oh, this one looks good. And then all of a sudden you're not focusing deep on any one thing. You're literally just caught in the rut of doing a little bit of a lot of things where, like you said, just go deep into the verticals that you really enjoy and that you want to build your business for. That's some unbelievable advice. Let me ask you one last thing here is, you said you had some free training, okay? And everybody loves free training. So if people wanted to find you or wanted to get access to some of this free training, where are the best places for them to go?
Yeah, cool. Good question. So Midwest Revenue Group is the name of my company. The web address for that, which houses a lot of the free videos, is midwestrev.com, midwestrev.com. We've got a page that's just a bunch of free scripts and videos and trainings. Also have a YouTube channel with probably 150 training videos on there. Midwest Revenue Group is the name of the YouTube channel. And we give it all away for free. You can find just tons of stuff on the website or on the YouTube channel, and it's plenty to get some people moving and to get people who are even seasoned investors to that next level.
So for all of you watching the Real Estate Money School here, there you go. There's some free training. You want to learn some of these things and you want to see them done, just follow John on YouTube or go to his website. And what we'll do is we'll actually put them up in the launch of this podcast so that you all can check it out and you can all see kind of what he's doing for other people. Because you know what's so unique about this, and I love it, John, because I've never done this, is, we're getting a third-party view of everything here. Instead of just being deep in the trenches, you're basically kind of seeing how it works, which is a whole new take on what we're doing. And I think our audience here is going to walk away extremely motivated and get some really good golden nuggets out of this. So I want to personally thank you for your time, because I know I picked up a couple of things here as well. So with that being said, that we're getting to the end of this podcast, and I want to make sure that all of our audience and all of our people watching this podcast, that you're getting the most out of this. And just like John said, you gotta take action. That's the biggest, most important thing to your success, is just leap and get yourself to take some action. And it always starts with 1 or it's two different things. Grab some, watching this podcast is a good start. Grab a copy of my book, The Private Money Guide. That'll teach you about all the solutions to finding money, where to go, and how to ask. But not only that, check out John's website. Check out our website, chrisnaugle.com, for all the up and coming stuff. And you know what? That's how you get it going. And that's how you're going to get a quick start. So I want to thank you, John, and I want to thank the entire audience for checking us out at the Real Estate Money School podcast. I appreciate all your time. And John, I appreciate your time as well.
Hey, thanks for having me. I appreciate it.
Absolutely. Thank you all. And we'll see you at the next episode.